So Warren Buffett is sitting on a pile of cash. Does he think a recession is happening or will it happen? Does he think valuations are just too high? That's what we're going to talk about in this video. So check this video out. Hi everyone, this is Marvin Germo. If you're new to this channel, please subscribe and smash that bell so you get updated every time I create new content about the stock market. I create daily videos on stocks and investing to give you the right conviction, the right knowledge on how you can trade and win, because I really believe that the stock market is one of the greatest investments out there. You just need to know what you're going into. You just need to know the risks, the rewards of it. So in this video, I want to talk about what's happening to Warren Buffett and his strategy, his style, his narrative, because over the past few days and weeks, you guys have been asking for me to make you guys videos about the crash, about there's so many people predicting that there's a 2020 recession. People are saying that the markets are going to go down. So I've created this series. It will still be on top of all of our stock trading videos that I'm still going to do. I'm still going to do those normal videos. But I'm adding this for people to be able to at least have a firmer grasp, an idea on what's happening and what other people are doing as well. Prior to this video, I made this yesterday. I made a video on Ray Dalio. You can check it out. It's one of the newer videos also in the channel. But Ray Dalio just put up a 1.5 billion US dollar put. The explanation on why he thinks the market will drop is because is in the video I posted. But basically, I'm just gonna show you different types of people and what they're doing with their positions right now. Because above and beyond principles, above and beyond what they say, one of the things that I've been doing also in my career in investing is it's not just about what people say, it's about what people are currently doing. So one of the things that we're gonna do also in this recession crash series is we are gonna break down what other investors are doing at this point in time as well. So just to share also to all of you, number one, no one knows when a recession will happen. I keep saying this over and over and over and over and over and over and over, that no one can accurately predict the date, the time, the specific condition that will trigger it to happen. I've also created several videos on what I think could possibly be triggers for the next recession or the next crash. But what we do know and what everyone believes is a recession will happen, a crash will happen. It's not a question whether a crash will happen, it's only a question of when. So, which brings me to what I want to share with all of you as well. You need to have the right data so that you get to decide on your own, but it's not just about having the right data, it's about executing on top of it. Why am I saying this? What I've been doing over the past few years also is that I'm still investing, I'm still trading, but every time fresh money comes in, I try to set that aside and create a fund. For those who've been watching the videos that I've created before, I'm sure you know about this. I call it my just in case of recession fund, just in case of market crash fund. Meaning, I'm storing cash there. This is not my emergency fund. This is not my buffer fund. This fund is purely for investments. Meaning, like Warren Buffett, I'm willing to stay and sit on cash and do nothing with it. The whole purpose of it is I will take out the money when I see a crash happen. So, but for me though, what I'm gonna do is this: when markets crash or real estate markets crash, or I find a specific item that will bring the markets or the economy in the US down, I will take out that cash, find the cheapest stock that I could buy, and deploy it against that. Or on the flip side, if I find a deal in real estate also that's so good, that's too cheap to ignore already, I might use the cash also for real estate. But please remember this: please do not be scared when crises happen, because when crises happen, there will be opportunities also for you to be able to invest. There will be opportunities also for you to be able to turn that around and create cash from it. People always talk about the 2008 recession as an area where people lost a lot of money, but what's not talked about most of the time is that in 2008 there were a lot of people also who saw opportunities, saw the fear, who saw beyond the fear and acted on it. Please remember, when everyone's scared, sometimes if you're an investor, that's the best time to buy. So by the way, this video will be catered to investors. This is not basically for traders, because for traders, our technique is we can use technical analysis. Our technique is we can use the charts for us to be able to come in and out. That even if there's a crash, we can especially US markets, you can actually short, but for Philippine markets, you can use the crash. You can still use technicals to buy and sell using support and resistance levels as well. Now, back to going to the crust of this video. For those who don't know Warren Buffett is, I'm sure you guys know, but for those who don't know, Warren Buffett is now 89 years old. He's now sitting on 85.8 billion US dollars of net worth, and he is the CEO of Berkshire Hathaway. One of the there's one of the highest priced stocks in the market today that doesn't even give. I remember Warren Buffett saying that he doesn't want to give dividends. Basically, for one basic reason that if he gives out dividends, it goes to other people, and he's actually saying that if he holds the cash, he knows what he's supposed to do with the money. He knows what he's supposed to do with the cash. That's why he's not a big fan of giving out cash dividends. But anyways, Berkshire Hathaway today is sitting on 128 billion US dollars in cold cash. So basically, a lot of people are thinking that Berkshire is probably sitting on the sidelines because they're waiting for something to possibly happen. Berkshire is sitting on the sidelines because they're preparing for something big that might happen. It may not happen in the next week. It may not happen in the next few months. But they're sitting. Why? Because they also have positions elsewhere that are making money for them. I'll talk more about that. What if they're losing opportunity when the market is going up because they're just sitting on a pile of cash? So that's an argument altogether that why not just invest massively right now and ride the market, then just come out again later when you see signs of reversal. That's a trader's mentality. That's a mentality also that I subscribe to, that if you are a position trader, you maximize the uptrend to the fullest extent, and then when it starts to reverse, you sell. But they have a different persuasion also. That's why it's nice to split your portfolios, that if you are an investor, it's nice to have an investing account with a different set of rules, a different set of techniques, a different set of narratives. That what you can do if you're an investor is sit on cash, markets drop, take out the cash, then boom, put it in one go. So that's what they're believing in. They're possibly believing in that, hey, the market has been up for 11 years already, that it will always come to a point when it will start to crash, it will start to reverse, it will start to go down. Or they're also thinking that valuations are too high already. It's not as attractive for them, especially Warren Buffett, who's a value investor guy. He wants to come in when things are attractive for him, when the upside is very, very good based on the price that he compared to the price that he would want to buy stuff. Hence, Berkshire Hathaway being so known and popular for buying companies at a discount. Please remember, Berkshire Hathaway has been known to pick up cheap companies during times of crisis. That's why people are now thinking, they're storing cash for something. They're storing cash for something. In the past, the deals that they've done in times of crisis, in times of people panicking, they bought GE, they bought Goldman Sachs, they bought Bank of America on those times of crisis as well. So this is a breakdown of Berkshire Hathaway's cash since 2010. If you notice it, they've massively increased it from 2010. So 2010 they just had 20 billion US dollars in cash. 2016 it tripled to 60 billion US dollars. Then they added, think about this, from 2010 to 2016 they added 40 billion US dollars in cold cash. From 2016 to 2018, they added 40 more. But if you look at it from 2016 to 2019, they've more than doubled it already, sitting on 128 billion US dollars of cash. So there must be a reason why they are doing it as well. And one of the biggest arguments of a lot of people is basically this. Why would they sit on this much cash when the S&P 500 is massively moving up? The S&P 500 is hitting all-time highs. They could have used that money and just positioned in the S&P 500, or just buy specific stocks out there and would have made money from it. So that's why a lot of people are not believing this stance. They're not a big fan of Warren Buffett's stance of putting in money. But as what I always say, the way for you to make money, the way for you to win, is to follow your set of convictions. Because I know Warren Buffett has a conviction that when when markets drop and valuations are too cheap to ignore already, he's gonna use and stockpile that cash to start buying. So if you are under the persuasion that sayang because he could have invested that money right now and would ride the bull market, but Warren Buffett does not work that way. And I guess that's why I create videos like this also, so you see different philosophies of people on how they trade and how they invested. There's no one source, one style, one technique that will make you rich, because there's so many different styles, there's so many different techniques, there's so many different narratives that will allow you, that will push you to make your money grow. What's important is you have to find that. That's why it's not about you relying on hype, it's not about you relying on speculation, it's not about you following your neighbor and how you can buy and sell stocks. It's about you pushing it and creating it based on your own style and strategy, because that's what's going to make money for you over the long term. You need to follow your plan. So one of the things that I saw now that people are suggesting on why Warren Buffett is thinking that the market will crash is that if you look at the Wilshire 5000 compared to the GDP and comparing its valuations to where we are right now compared to other areas where the markets have crashed. For those who don't know, in the early 2000s, there was an internet bubble. There were a lot of dot-com companies that wanted to ride the internet dot-com wave. They just created dot-com companies who weren't actually making money. Their valuations were just going up. Please remember also, every time a crash will happen, companies that have crazy valuations that are not earning will lose. Companies that have real business models, companies that are earning massive amounts of money will win. So in the early 2000s, companies that didn't have anything, they were just shell internet companies, or they weren't really earning as much, they weren't doing so well, they were just doing it to prop up valuations, they all closed down. But the ones that were making a lot of money up until now, the Googles, the Yahoos, the Amazons, are still living and are still increasing. But the point of this picture is basically this: the higher the ratio of what I'm showing you, the higher the valuations are. So in 2000, where the internet bubble happened, the Wilshire 5000, the GDP percentage was 136.9%. Today, we are sitting on 139.3%, meaning valuations are crazy high. Valuations are back to where it was during the internet bubble. So please remember Warren Buffett's style. He doesn't want to buy when it's expensive. He doesn't want to buy when valuations are crazy. And if you know Warren Buffett and you've studied his style, his context, his narrative in trading, Warren Buffett's not a big fan on holding a lot of cash. He believes that when he holds a lot of cash, it doesn't make money for him. So there must be a very, 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 very specific reason on why Warren Buffett is holding to that much cash as of this point in time. That's why I've been saying it over and over. He doesn't like to hold cash. However, if there are little to no buying opportunities, he's willing to wait. He's willing to sit out on the sidelines. He's willing to just stay in cash until an opportunity to buy cheap presents itself. So please remember, and I'll say this over and over, no one knows when the market will crash, but the best thing you could do is to prepare for it. I'm just going to make this series so that you get informed, you get updated, you get as much information, philosophies, strategies on what other people are doing. I'm going to share my own also. As you all know, we create daily videos also on trading so that you get to have a holistic sense of information and data, because all I want is for you guys to win. Comment Warren Buffett if you think he is right and a crash is coming and you are also preparing. Comment bullish if you think Warren Buffett is wrong and you think that the markets will just go higher, that the best for the market is still to come. You have to remember also that people have been predicting a crash since 2013, 14, 15, 16, and now it's already 2019 turning to 2020 and the crash has not happened yet. So I guess that's it. If you guys have any questions, comment them below. And I'm going to make more and more and more videos about this. I'm going to create as much, because all I want is to educate you. All I want is just to create a framework where Filipinos win. I want to help you guys that you get to win and you get to trade the markets with confidence. I want you guys to be wherever you are in life, Filipinos abroad, Filipinos in the Philippines. I want you to be able to use the stock market to help you reach your goals of financial freedom. I'm creating this also so that should a crash happen, you do not panic and you know what you're getting into. Just to end, guys, all of my books are in Shopee. Link is in the description. I hope you guys, for those who want to learn, for those who want to increase their knowledge on trading and investing, all of my books are created and for you guys. It's very foundational with one goal, one heart in mind, that you guys get to trade, that you guys get to win. in the markets. So that's it for now. This is Marvin Germo. I hope you guys learned a lot from this, and I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.